So hi, I am Norasia Islokman. I'm the first reporter for the topic audit reporting. So let us start. Learning objectives. At the end of the discussion, participants shall be able to know the responsibility of the auditor to report the financial statements and the formation and expression of the auditor's opinion, and the last one would be the standard audit report and its part. So next one, let me give a brief introduction sa audit reporting. So ang main purpose ng audit reporting is to communicate the result of the auditor's work sa different users ng financial statements. So basically, ito yung one of the phases sa audit process, audit of financial statements. So dapat alalahanin natin yung different elements ng audit engagement and where audit report will enter. So how does it involve with the audit process? So basically, we have three parties regarding this topic. So these are the management and those charged with governance, the auditor, and the financial statements user. So, diba, the management will be the one preparing the financial statements. So they will also be the one providing the assertion. So, anong gagawin ng auditor? So titingnan niya or i-check niya whether ito bang assertions are made in accordance with the particular criteria. So in case of audit ng a financial statement, its primary criteria would be PFRS, GAAP, or others that is suitable criteria. So in order to do that, the auditor will be performing procedures. So the objective of the said procedure would be for him or her to gather sufficient appropriate evidence. So to gather this sufficient appropriate evidence, there are certain factors that need to be considered. These are the materiality, audit risk, cost benefit, cost strength, and professional skepticism. So ang objective niya ay to gather sufficient appropriate evidence to have enough basis para makapag-express siya ng kaniyang opinion. So, and such opinion will then be communicated through an audit report. So, it will be communicated to the different financial statements users. So, with this flow provided, we can see the things happening in the audit process, diba? So, as you can see sa flow na naka-provide naman dito, we can see yung process ng audit process. So, pumunta na let us then tackle about the objectives ng auditor. So diba, ang specific objectives ng auditor are prescribed by the standards. So, that's why from the very start, we have talked that the main objectives ng auditor in an audit of FS is the expression of an opinion. So of course, before it expressed, magkakaroon ng formation. So another way of stating the auditor's objective to obtain reasonable assurance that the FS are free from material or the statement. So those are the different objectives of the auditor in an audit of FS. So let's start. So what is formation of opinion? So to be able to form such opinion, reasonable assurance must be reached by taking into account the following FEM. So let's tackle about this said FEM. So first one is whether sufficient and appropriate evidence has been obtained. So always remember that the evidence will serve as the primary basis in expressing your opinion. So if no evidence is presented, hindi ka makapag-express ng iyong opinion. So that's why before you can formulate an opinion, you have to have a sufficient and appropriate evidence. Next one, whether on a corrected misstatements, which are misstatements that the auditor has accumulated during the audit and that have not been corrected, are material individually or in aggregated. So of course, there will be consideration if there is a material misstatement. It is because the main objective is to provide a reasonable assurance at a financial statement. So dapat you have to consider we have to consider it if free ba ito from material misstatements, because if there is a material misstatement, it will entirely affect in expressing your opinion. So next one, whether the FS are prepared in all material respects in accordance with the requirements of the applicable financial reporting framework. So at the end of the day, for you to express an opinion, you have to establish that the assertions that made by the management are prepared in accordance to with this PFRS. So kaya napaka-importante talaga na masunod yung nakalagda doon sa PFRS sa paggawa ng assertions ng management para ma-prevent na magkaroon ng misstatements doon sa audit of FS. So next one would be the expression of opinion. So we have already have an overview of the different types of opinions that the auditor can express. So for the specific type in expression of opinion, so first one is the unmodified or unqualified. So you will have to express an unmodified if the FS ay nag-adhere siya doon sa criteria that should be used. So it's common phrase you to describe an unmodified or something that you will expect to see in a certain opinion is this one: present fairly in all material respect or give a true and fair view. So ito yung mga most commonly used because it is the exact example given by the audit report. So next one is the qualified or qualified opinion. So generally it updated is sufficient appropriate evidence, kaya lang there are other items that are not fairly stated or doesn't have a sufficient appropriate evidence. So pag ganun ang phrase, ang common phrase na makikita mo doon ay except for. So next one is the adverse opinion. So totally you are going to negate the representations made by the management. So the common phrase used there is the do not present fairly in all material respects. So the last one is the disclaimer of opinion. So it is the type of opinion where no opinion is being expressed because certain circumstances made the auditor unable or it didn't allow the auditor to express an opinion. So the common phrase used is we do not express a conclusion. So let's further look at the details of the different types of opinions. So next slide. So first, let's further look at the details of the different types of opinions. So first one is, are the effects of non-compliance from the framework immaterials? Kasi kung immaterial lang naman, di ba parang wala lang? So if it is a no, it means ito ay immaterial. So its opinion is unmodified. And if it is a yes, it depends naman. Kasi what is the circumstance giving rise to the modification? So as been said here, what is the circumstance giving rise to the modification? So well, we have to find out what is the reason sa possible scenario. So first one is inability to obtain sufficient and appropriate evidence. So the practitioner could not or cannot gather sufficient appropriate evidence. So pagka ganyan, it is called limitation of scope. So next one, FS are not free from material misstatements. So here, there is an error or mistake naman dito. So, ito yung mga disagreements between the auditor and the management or possible na here, combination siya ng 1 or 2. So, here, to express an opinion, the first is limitation of scope. So in limitation of scope, it is composed of two. So first one is imposed by management. So the main reason why the auditor wasn't able to gather sufficient appropriate evidence was because sa actions naman ng management. So for example, we have to identify something that needed to send a confirmation request because it is one of the procedures ng auditor. So but in the case here ayaw ng management. So that's an example of imposed by management. So next one is imposed by circumstances. So like the previous example here, but in this case pumayag naman yung management, but the problem is puro positive yung sinend mo, tapos yung confirming parties walang sumasagot sa iyo. So you aren't able to gather an evidence from them. So that's why it is imposed by circumstances, because biyan na siya ng control ng management. That's why it is imposed by circumstances. So remember, before magkakaroon ng limitation of scope, there should be no alternative procedure. So the question here is the impact to the FS pervasive? So what is pervasive? So pervasive is yung di magather na evidence regarding the item. So nawalan na ng capability para sa buong FS yung auditor. So if it is a yes, it is a disclaimer of opinion. So pag no naman, your opinion will be qualified. So next, what if in the condition of the inappropriate accounting policy of or inadequate or inappropriate disclosure? So the same question lang naman dito, is the impact to the FS pervasive? So if hindi siya pervasive, qualified siya. But so qualified siya. So pagka naman material and pervasive, it is an adverse opinion. So next naman here is this one. If it is a combination of 1 and 2, it will show here na mas nangingibabaw yung 2 or yung disagreement. So if impact alone is pervasive, it is an adverse. Pag pag no naman, so possible na siya, it is the combined impact of 1 and 2 to the you have to choose if whether if ever pipili ka ba ng expression through adverse or qualified. So that would be all in this slide. So next one, parts of the standard audit report or the taob masab. So T stands for title, A stands for addressee, O stands for auditor's opinion, B basis for opinion, M responsibilities of management for the financial statements, A auditor's responsibilities for the audit of the financial statements, and then S name and signature of the auditor, A auditor's address, D the last one, D date of the auditor's report. So let us discuss the parts of the standard audit report. So first one is the title. So the title should indicate that it is a report of an independent auditor. So this distinguishes the report from reports issued by other parties. So the title is independent, so it emphasizes for identification para alam kung saan yung certain report na yun. So next slide, the addressee. So here so nakalagay dito sa table, in corporation it is often addressed to either the shareholders or to those charged with governance of the entity. So for partnership, it is either to partnership and the partners or to the partnership. So unincorporated joint venture to the proprietorship to the proprietor, and then the last one, third party, outside party, if the auditor is engaged by any party. So other than the responsible party, the report is normally addressed to the engaging parties. This may include prospective investor, creditor, prospective creditor, regulatory agencies, or court laws. So commonly, ang concept ng advocacy is to identify lahat ng users. So hanggang kaya i-identify mo yung mga users. But if medyo marami naman, just only identify kung sino yung directly affected dito. So next slide. For the auditor's opinion. So given naman siya lahat dito. Let me read na lang. So, identify the entity whose financial statements have been audited. State that the FS have been audited. Identify the title of each statement compromising the FS. Refer to the notes, including the summary of significant accounting policies, and specify the date of or period covered by each FS compromising the FS. Express the opinion form on the FS. So next slide. So here naman given na siya, so no need to explain. So next slide. So here naman it discusses the condition or circumstances which allow the auditor to express an opinion. So next, the responsibilities of management for the financial statement. So here preparing the financial statements in accordance with the applicable financial reporting framework. Internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error, and its concept is all items presented in the FS. So these are the responsibilities of the management alone. Also, prevention and detection of fraud and error ay responsibility din ni management. We also had learned from BSA 560 na it is the responsibility ng entity to assess whether or not they have the ability to continue as a going concern. So next slide. Auditors responsibilities for the audit of the FS. So its responsibility so is to express an opinion. So here is given na yung mga niya. So all in all, description of audit, pwede na ilagay sa auditor's report or pwedeng mag-attach ng separate documents sa auditor's report where it describes the auditor procedures and auditor's responsibilities or links para where users can access yung mga ginagawa ng audit para aware sila kung ano yung nasa loob nito. So next slide. Name and signature of the auditor. The auditor's report shall be signed. So it is required to put the name of the engaging party. So here the auditor's report shall be manually signed. In the rare circumstances that the auditor intends not to include the name of the engagement partner in the auditor's report, the auditor shall discuss this intention with the TCWG to inform the auditor's assessment of the likelihood and severity of a significant personal security threat. So paano? So pagkalistig nakalagay doon the name of the engagement partner or pwedeng pwedeng the name of the engaging partner or pwedeng name of the firm or pwedeng isahan lang yung pagkalagay. So, dapat rin it is manually signed. So, if hindi ilalagay yung so pagka hindi naman ilalagay yung name ng engagement partner, requirements is to discuss it with those charged with governance, especially if may threat sa life yung partner. So that is a valid reason naman. Next one, the auditor's address. So the auditor's report shall name the location in the jurisdiction where the auditor practices. So para madali ma-identify later on if ever there will be questions. But actually hindi naman kailangan na ilagay doon yung exact or specific location ng address mo. So, normally, pagka yung ilalagay na address kung saan ka nagpa-register na firm ng accounting mo, yun yung ilalagay mo na address. Next slide. Date of the auditor's report. The report shall be dated no earlier than or on or after the date on which the auditor has obtained sufficient appropriate evidence on which to base the auditor's opinion on the FS. So here, so ano yung date na ilalagay dito on which the auditor has obtained sufficient appropriate evidence. So before it is popularly known as fieldwork. So dapat yung date of auditor should not be earlier than the last day of fieldwork, because yung fieldwork na yun yung time na mag-gather ka na ng evidence. So it would be actually weird no pagka hindi ka pa tapos mag-gather ng evidence tas meron ka ng auditor's report agad. So because yung report na yun kasi naka-base yun or result yun ng pag-gather mo ng evidence. So kaya dapat matapos mo muna yung fieldwork mo bago ka maglagay ng date. So dapat yung date na ilalagay mo ay on or after the date of the fieldwork. So
Assalamualaikum and good afternoon to everyone. Now let us move on to the next chapter of our discussion, which talks about the modifications of opinion in audit reporting. First, let us define what is modifications of opinion. Now, aside from the definition given in the presentation, modifications of opinion refers to the changes or qualifications made to the standard audit opinion. And this opinion arises where there is an error or a disagreement over a particular matter or a lack of sufficient audit evidence in a particular area of the financial statements, including the disclosures. Now, why do we have to study the modifications of opinion? Now, we have to study modifications of opinion due to several reasons. Number one, for the professional and regulatory requirements. Understanding modifications help the auditors comply with professional standards, including the generally accepted auditing standards and the regulatory requirements. Familiarity with modifications ensures the auditors to maintain the objectivity, integrity, and transparency. Number two, the financial statement users need. Modifications report provides the users, such as the investors, creditors, and stakeholders, with essential information for informed decisions. Modifications will also highlight the potential risk that is affecting the financial statement. Number three, the audit quality and credibility. Proper modification application maintains audit report credibility, and it will also help the auditors ensure the high quality audits. And lastly, the practical application. Understanding modification prepares the auditors for complex real-world situation. And as for critical thinking, analyzing modifications develop critical thinking and professional judgment skills. So, to summarize it all, studying modifications of opinion audit reporting enhances the auditor's expertise, promotes professional growth, as well as supports the effective financial reporting. Now, what is the purpose of an audit report? The purpose of an audit report is to make a statement about a company's financial status related to its financial reporting. The audit report provides a picture of a company's financial performance in a given fiscal year and how effective the company complies with the regulation like the General Accepted Accounting Principle, or what we all know as GAAP. Now, if you wonder, when do auditors prepare their reports? Now, before the audit, management provides financial information to the audit committee. Before the annual audit, the auditor has to review the processes and procedures that the company used to prepare the financial information. After the audit, the auditors prepare the audit reports, including checking to see whether the company uses GAAP or other application reporting frameworks. Now, in audit reporting, we must remember these 5 C's. Though the content of an audit report can vary slightly based on the auditor's opinion, most reports will include the auditor's point of view on what we call the 5 C's of audit writing. These are the number 1, the condition. What is the item being reviewed? Number 2, the criteria. What did the organization meet or fail to meet? This could range from misstatement to a regulatory infraction. Number 3, the cost. What made the issue possible? Number 4, the consequence. What is the outcome of the auditor's finding? And number 5, the corrective action. How should the organization mitigate the issue? Now, in auditing, there are the components of the audit report. And these components are, number 1, the report title. Most audit report titles should be straightforward and can indicate whether the auditor is independent or not. Number 2, the introduction. This section is typically a short paragraph that includes the company and duration under audit. Number 3, the scope. This section is roughly a paragraph and defines what the auditor reviewed. And number 4, the executive summary. The auditor briefly summarizes the audit results and their opinion. Number 5, the opinion. Finally, the executive summary. The auditor will provide more detail about the opinion and what it means for the organization. And lastly, number 6, auditor's name and signature. The auditors will close the report with their name and signature. Assalamualaikum and good afternoon to everyone.
There are actually types
Now let
of
us move on to the next chapter of our
We
discussion, which talks
qualified
about
opinion,
the modifications
the
of
adverse opinion,
in audit
the disclaimer
reporting.
opinion,
Now
and
first,
the
let us
unqualified
define
opinion.
what is modifications of opinion. Now, aside from the definition given in the presentation, modifications of opinion refers to the changes or qualifications made to the standard audit opinion. And this opinion arises where there is an error or a disagreement over a particular matter or a lack of sufficient audit evidence in a particular area of the financial statements, including the disclosures. Now, why do we have to study the modifications of opinion? Now, we have to study modifications of opinion due to several reasons. Number 1, for the professional and regulatory requirements. Understanding modifications help the auditors comply with professional standards, including the generally accepted auditing standards and the regulatory requirements. Familiarity with modifications ensures the auditors to maintain the objectivity, integrity, and transparency. Number 2, the financial statement.
Assalamualaikum everyone, I am Aisa Bipadate and today I will discuss to you the key topics from audit reporting, specifically key audit matters or key AM and the emphasis of matter paragraph or AMP. So, these are the critical in understanding how auditors communicate important findings. So, let's proceed to the next slide. So, the key audit matters or key AM. So, it is defined as matters of most significance during the audit. So, the auditors disclose why the matter is significant and how the matter was addressed in the audit. So, key AM or the key audit matters provides insight into the auditor's focus and judgment. So, key AM or key audit matters highlights the auditor's areas of focus. So these are the most challenging or significant parts of the audit. So it requires extra time or judgment. So in essence, KEM provides transparency to financial statements users about the where auditors face the most difficulty. So one of the users of financial statements is the government. So moving on, so here is the example of key M or the key audit matters in a report. So, for example, is that GCC Bank Audit Report, key M, impairment losses on loans to customers. So, why it is significant? So, complex modeling under PFRS 9 requires judgment on future economic conditions. So how it is addressed? So it is reviewed assumptions, models, and implementations of the accounting standards. So impairment losses were identified as a key issue. So this area required a lot of judgment and technical analysis due to its complexity. So which the auditors address by validating the models and assumptions used. So let's move on to the communicating key AM or the key audit matters. So key AM or the key audit matters is included in the auditor's report. So here's are the exemptions. So first we have here the when laws prohibit disclosure. Second is if disclosure causes more harm than benefit. And third, we have here the when modification of the audit opinion is necessary. And last, we have here the requires discussion with the audit committee. Moving forward, let's discuss the emphasis of matter paragraph or EMP. So, EMP highlights significant issues already disclosed in the financial statement. So, it is used for specific circumstances. So, we have here the guest acronym. So, we have here the going concern, uncertain litigation outcomes, early application of standards, special purpose financial statements, and subsequent discovery of facts. So, AMP directs attention to important financial statements disclosure. So, using the guest acronym helps remember when it's applied. So, for example, is yung going concern issues like a natural disaster affecting the business. So, moving forward, let's discuss the example of EMP or emphasize matter paragraph. So, we have here the going concern assumption, uncertain litigation outcomes, and early application of standards. So, going concern assumption is that material uncertainty exists about the entity's ability to continue operations. And uncertain litigation outcomes, it is significant legal risk disclosed in the financial statements, and early application of standards, impactful new standards adopted early by the entity. So, EMP examples include situations like going concern risks or lawsuits with uncertain outcomes. So, the auditors uses EMP or emphasis matter paragraph to ensure users don't miss this significant issue. So, but it doesn't change the audit opinion. So, moving forward to the next slide, key EM or the key audit matter versus EMP or the emphasis matter paragraph. So, we're going to discuss the aspect to the key EM or the EMP. So, the purpose. So, first, let's discuss the purpose. So, the purpose of key EM is the areas of significant audit effort, while the sa EMP highlights the key disclosures. So, when it comes to their focuses, sa key EM, it focuses on auditor judgment, while sa EMP, sa financial statement issues. When it comes to their opinion impact, so sa key EM and EMP, there is no opinion modifications. So, key EM and EMP are often confused, but they serve different purposes. So, key EM focuses on what challenges the auditor, while EMP emphasizes issues already disclosed by management. So, neither modifies the audit opinion but improve transparency. So, next slide. It is the conclusion. So, key EM provides the insight into audit complexity and judgment, while EMP ensures attention to significant disclosure. So, together, they enhance the transparency and reliability of audit reports. So, in conclusion, key EM and EMP improves the clarity of audit reports. So, they give stockholders a better understanding of the financial statements and the audit process. Next slide. So, I think that's all. And thank you, everyone. So, again, I am your reporter, Aisa B. Padate. Thank you.
Good day and Assalamualaikum. I am Distoma Jamala and I will discuss about emphasis of matter paragraph by guest. So there are circumstances that may require matter paragraph. So first is going concern assumption, uncertainty about entity's ability to continue operation. Second is uncertain outcome of exceptional litigation or regulatory action. This is pending legal or regulatory action with material uncertainties. So if there is a legal case with an uncertain outcome, it could have a material effect on the financial. Third is early application of new accounting standards. So it is material impacts of newly adopted standards. So this may affect how the financial are presented. Fourth is special purpose financial statements, when financials are prepared for specific users. Next is subsequent of discovery of facts. Facts discovered after the audit that impact previous financial statements. So, if new facts come to light after the audit is completed that impacts the previous financial statements, it must be disclosed. Last one is major catastrophe or tragedy. So, events like natural disasters affecting the financials. Next is other matter paragraph or OMP. It's a paragraph included in auditor's report that refers to a matter other than those presented or disclosed in financial statements. So the inclusion of OMP in auditor's report is subject to the following condition. First is the inclusion is not prohibited by law or regulation. Second is the matter has not been determined to be KAM to be communicated in auditor's report. Moving on emphasis of other matter, paragraph 5 pros. So there are circumstances that may acquire other matter paragraph. First is comparative information. So issues with prior period information. So if the previous period financial are inconsistent or require adjustment, the auditor will mention it here in comparative information. Next is restriction on distribution or use of report, limited reports access or specific users. Third is material inconsistency in other information. This is mismatches between audited statements and other reports. So next is inability to withdraw. Situation preventing the auditor from disengaging despite two serious issues. This, if an auditor cannot disengage due to unresolved matter, this is to ensure users understand the situation. So next is subsequent discovery of facts. New information requiring disclosure after the report. So this is similar to emphasis of matter, but this pertains to information that comes to light after the financial statements. The last one is reporting on more than one set of FS prepared using different frameworks. Next is the audit procedure over supplementary information. The integral part of financial statements. So this is supplementary information is audited and included in audit opinion. So this is part of audit scope. So next is the non-integral part of financial statements. So when the supplementary information is separate, the auditor will ensure that any issue are clearly disclosed in audit report. Next is other information. So refers to non-audited financial or non-financial data accompanying the audited financial statements, so such as annual reports, governance statements, management's future outlooks, and risks. Next is the auditor's responsibility over other information. This is limited and does not constitute assurance. So the objectives of responsibility of auditors over other information. So first is to consider whether there is a material inconsistency between other information and financial statements, auditors' knowledge from the audit. Second is responsibility appropriately to material inconsistencies. Third is report in accordance with auditing standard. So here are the audit procedures. So first, discuss the report with management, obtain the annual report timely manner, read the annual report, determine any material inconsistency, consider the impact of material inconsistency. Moving on responding to material inconsistency. So there are circumstances and effect of material inconsistency. First is financial statements misstatement. If management refuses to correct the material misstated in the FS, it may warrant issue or either qualified or adverse opinion. Second is other information misstatement. If financial statements are issued an unqualified opinion, but the auditor shall include inconsistency in other matter paragraph. Next is material misstatement of fact. So this occurs when other information contains errors that unrelated to the financial statements. So the action we'll do is discuss with management. If unresolved, consult a legal counsel and notify governance. So
Hey, my name is Rani Sabdul Jabbar, and I'll be reporting comparative information under the audit report. Comparative information under the Philippine Financial Reporting Standards which is PFRS, requires reporting entities to present at least 2 comparative years of financial information. And we have unlisted companies and listed companies. Under the unlisted companies, a minimum of 2-year comparative statement for the statement of financial performances and statement of cash flows and statement of changes in equity. And for our listed companies, a minimum of 2-year comparative statement for the statement of financial position and a 3-year comparative statement of financial performances, statement of cash flows, and statement of changes in equity. The auditor responsibility for the comparative information is dependent on the approach adopted, which falls into 2 categories, which is we have corresponding figures approach, integrates period figures as a part of the current financial statement but focuses mainly on the current period disclosure. And the comparative financial statement approach treats the period's figures as distinct statement for direct comparison and includes them in the auditor's opinion if audited. And audit reporting under the corresponding figures approach, we have conditions, opinion on current period, reference to the corresponding figures. Under the statement 1 on condition, corresponding and current years figures are fairly stated. And under the first statement of opinion on current period, unmodified opinion siya. And sa statement number 1 naman ng reference to the corresponding figures, no reference shall be made. Okay. Statement number 2 under the condition, corresponding figures contains misstatement and remain unsolved during the current period, and the opinion on current period, statement number 2, qualified siya or adverse siya opinion. Reference to the corresponding figures, statement number 2, siya ay reference shall be made since it's the cause or one of the causes of misstatements. And comparative financial statement approach, when dealing with the comparative financial statements, the auditor's opinion covers both current and prior periods. Conditions and reporting requirements. If the prior period's financial statement were audited by another auditor, include an other matter paragraph to inform users about the prior period was audited by a different auditor, or the type of opinion issued previously, and the date of the previous auditor's report. And if the previous auditor's unqualified opinion is found to have material misstatements, communicate to the management and inform the previous auditor. If the period statement were unaudited, includes other matter paragraph explaining the context. Additional reporting considerations we have initial audit engagements, group audit engagements, and other reporting responsibilities. Additional to the reporting consideration in initial audit engagement, when auditing for the first time, the auditor must evaluate the opening balance of the financial statements, and opening the balance refers to the balances carried over from the period's financial statements. Procedure for the opening balances: review the prior year's financial statements and auditor's report. Ensure the opening balance do not contain misstatements that could impact the current period. Obtain the evidence about the consistent application of accounting policies or the effect of any changes. Audit procedure for opening balances: determine whether the period's closing balances are accurately carried forward or restated, whether the opening balance comply with the applicable accounting policies. And for the perform audit procedure, review the peer auditor's working papers if available, evaluate whether the current audit procedures provide evidence for the opening balance, and conduct the specific audit procedures for additional evidence. key consideration, misstatements in opening balances requires additional audit work to assess the impact, communicate, identify misstatement to management of governance bodies. Consistency and adequacy, assess whether the accounting policies are consistently applied and appropriately disclosed. Lastly, the nature, this is an example of the nature matter, material but not pervasive, and material and pervasive. So, here are the statements na magsasabi na of qualified opinion ba siya or advice opinion siya or qualified opinion siya or disclaimer of opinion. So as you can see, the nature of the matter is the first statement is opening balance and contain material misstatements that materially affect the current period's financial statements. Sure. So, qualified opinion siya. And under the material pervasive is siya ay advice opinion. So, the next is inability to obtain sufficient appropriate audit evidence regarding opening balances, material but not pervasive, qualified opinion siya. And siya ay under the material and pervasive, disclaimer of opinion siya. So, dun na nagtatapos yung ating discussion about comparative information under the audit reporting. So, thank you for listening.
Reporting on group audit engagements. So, audit practitioner may be engaged to perform audits of financial statements of group. So, these are the elements of a group audit. It composed of component A, B, C, D, and E. So, group management and group audit has group engagement team, group engagement partner, group engagement staff, and group engagement team has group financial statements, group audit opinion, also sufficient appropriate evidence, suitable criteria, work of components auditors, consolidation procedures. So here are the definition. A group pertains to all components whose financial information is included in the group financial statements. A group always has more than one component. The term group financial statements also refers to combined financial statements aggregating to the financial information prepared by components that have no parent but are under common control. The management responsible for the preparation of the group financial statements is referred to as group management. A component is an entity or business activity for which group or components management prepares financial information that should be included in the group financial statements. Also, the audit of group financial statements is referred to as group audit. The audit opinion expressed on the group financial statement is referred to as group audit opinion. So the group engagement partner is a partner or other person in the firm who is responsible for the group audit engagement and its performance. Also, for the auditor's report on the group financial statements that are issued on behalf of the firm. More often than not, the GEP is also the engagement partner of the separate financial statement of the patent. A components auditor is an auditor who, at the request of the GEP, performs work on financial information related to a component group audit. So, using the work of components auditor, the GEP may plan to request a component auditors to perform work financial information of a component. The purpose of this involvement is to obtain sufficient appropriate audit evidence on which to base the group audit opinion. In this case, the GET shall obtain an understanding of the following. So first, whether the component's auditor understand and will comply with the ethical requirements that are relevant to the group audit and in particular is independent. So second one, the component's auditor's professional competence. So third, whether the GET will be able to be involved in the work of the component auditor if necessary. And fourth one, whether of the component auditor operates in a regulatory environment that actively oversees auditors. And moreover, it is imperative that effective two-way communication between the GET and component auditors may be established. This reduces the risk that the GET may not obtain sufficient appropriate audit evidence on which to base the group audit opinion. So, group audit opinion. Although components auditors may perform work on the financial information of the components for the group audit, the group engagement partner or the group engagement partner's firm is responsible for the group audit opinion. The GET shall evaluate whether sufficient appropriate audit evidence has been obtained from the audit procedure performed on the consolidation process, the work performed by the GET, and the work performed by the components auditors. So, other reporting responsibilities. The auditor may have additional responsibilities to report on other matters that are supplementary to the auditor's responsibilities under PSAS. First, reporting on certain matters if they come to the auditor's attention. Second, reporting on additional specified procedures. Third, expressing an opinion on specific matter.